Okay guys, so this is part 2 of the issue share capital and retained earnings account video. Okay. Now, I'll be going through workbook page 170. Okay. Jamie Consultancy Services Private Limited. Now, question 1A talks about the accounting theory. Basically, it's accounting entity concept for this one. Okay. I'm not my focus on all these videos is not to handle theories. You guys can go and read theories on your own. But I'll handle the calculations as well as the other posting that's more important. So calculate the total share capital. Now the total share capital has to be 120,000 multiplied by $1.60 because 120,000 is the number of shares that they had issued. Okay, so this will give me 192,000 in dollars. Okay, so that's the total share capital. Prepare the journal entry to record the issue of share capital. Narrations are not required. That's for part C. Okay, now the general journal has to be prepared accordingly. Date, particulars, debit and credit. Okay, so I will squeeze it in a little so that you guys can see clearer. Okay, so the date itself. Now remember, just now in part 1 of the video, if you have watched it, okay, in part 1 of the video, I really mentioned that it has to be on the date itself when you're issuing it, right? Okay, so it is on 20x1, 1st January, that you have issued shares for it. So I will record it on that date. Now, what will happen will be you will have only one double entry when it comes to issuance of shares. Debit cash at bank, okay, credit issued share capital. Okay, and that amount will have to be the one that we already calculated, right? Okay, which is the 192,000. 192,000 over here. Okay, so it will be 192,000, 192,000 because it is 120,000 shares multiplied by $1.60. Okay, now next part D, they actually mentioned about preparing the share capital account. Share capital account. So date, particulars, debit, credit, balance. Okay, now share capital account does have balance brought down. Okay, but in this case, because there is no balance brought down from 20x0, okay, they only started the consultancy services as of 1st January 20x1. So in this sense, there's no balance brought down. Okay, what we will record is we will record the issuance of shares, right? So on 20x1, 1st January, I will have debit cash at bank, credit issue share cap. So I will have credited the issue share cap with 192,000. Opposite account is cash at bank. Okay. Now, why credit? Some of you guys must be asking. Because share capital credit is plus, is an equity account. DR is minus. Okay. And moreover, you can see from my journal entry here. Okay, I've credited issue share cap, so I have to credit the issue share cap accordingly. Okay, credit the issue share cap accordingly. So it's 192,000. Now, by the financial year end, okay, sorry, it is this question requires us to bring down the balance on 1st February. So by 1st February, okay, 20x1, I will have my balance brought down, which is 192,000 CR. Okay, so that's it. This is the answer for A, B, C, and D. Okay. Okay, so for the next question, workbook page 171, question 3, Glow Wellness Private Limited. Okay. In part A of the question, calculate the total dividend declared by Glow Wellness Private Limited on 7 November 20x2. So the total dividends has to be simply 20 cents. Okay. If you read the question, on 7 November, Glow Wellness declared a dividend of 20 cents for its 90,000 shares. So it's 20 cents dividends times 90,000 shares. Okay. So that will give you $18,000. Sorry, this is $18,000. Okay, so $18,000 here. Okay. Now for part B1, BI. Journal entry to record the dividends declared on 7 November. So now I know it's $18,000. Okay. So let me just shorten this. Okay. So I know it's $18,000. I will now record the general journal for it. Date, particulars, debit and credit. So in order to record the dividends declared on 7 November, okay, it was also noted that the dividends were paid out on 8 January next year. So that means on the date that I declared on 7 November, I had not paid for it. Since I have not paid for it, okay, it has to be dividends payable. Okay, dividends payable. So for this part, 20x2, 7 November, okay, debit dividends, credit dividends payable. Okay. Now, I have not talked much on the dividends in part 1 of the video because my concentration was on retained earnings. Just to do a quick run through, okay, if you have dividends declared for on that day itself, if you have not paid for it, it has to be dividends payable. If you pay for it, that will be cash at bank, obviously. Okay, so because this question states that it is on 8 January 20x3, which is next year, I will debit dividend, credit dividend payable to record it as an owing amount of $18,000. Now B2. B2 is saying journal entries to transfer the dividends and profits to the retained earnings on 31st December X2. In part 1 of the video, okay, you will have seen that I stated clearly in the retained earning account, okay, dividends and profit is transferred at the end of the financial year. So on 20x2, 31st December, okay, I will show you the transfer of dividends to the retained earnings account, which is the one that I spoke in the part 1 of the video. Basically, it is debit retained earnings, credit dividends. In this case, I had only 18,000 declared for the year, so it will just be 18,000. Okay. On 31st December, okay, there was another item that I need to record, which is the profit for the year. Now, refer back to part 1 as well. If I have profit earned for the year, what I will do is I will debit income summary, credit retained earnings. If it's loss, it's the opposite way. I will debit retained earnings, credit income summary, but because this is a profit. Okay, so the profit for the year amounted to 6,400 if you look at the question. Okay, so that is part B2 of the question. Now part B3, okay, the general journal, okay, to record the payment of the dividends on 8 January 20x3. So on 20x3, 8 January, remember the dividends payable previously over here? It is a credit balance that I will bring down to the next financial year. So right now, what I will do is I will debit dividend payable to cancel it out. Okay, because I'm paying with cash at bank. Okay, this will cancel out the liability that was recorded previous year. Okay, so this is how the journal entry should be like. Now, part C. Now, I know I haven't went through the dividends account. Okay.